Assalamualaikum and good day to Dr. Jalila and all my fellow friends. I'm Aisyah Finas and my group mates Wan Nur Atira, Nurul Fatana and Nur Humaira. We are from Group 4. We discuss the case analysis of September 11 attack in United States. Okay, our presentation will begin with me, Ain, next Wan Nur Atira, followed by Nurul Fatana and lastly Nur Humaira. Next. This is our list of content which are overview of the case, fundamental issue problem of the accounting theory, and suggestion on how the issue and problem can be solved. So let's move to the case overview of the September 11 attack in United States. The problem arises when the terrorist attacks of the September 11, 2001, which known as the September 11 event, resulted in the tragic loss of the life and property. This also interrupted the business activity of many entities and disrupted the United States economy at the many levels. The September 11 event were unprecedented in the United States in the term of the magnitude of the losses incurred and the number of entities affected, and many companies incurred substantial costs. In fact, as the direct result of the September 11 event, United States Secretary of the Transportation, which is airline company, issued the federal ground stop order that closed the United States air travel system for 24 hours, resulting the reduction in revenue and profit. The task force noted that many companies that effect of the September 11 event may require accounting recognition in financial statement for the period ended September 30, 2001. Hence, the task force conclude that it should quickly address and resolve this issue and observe the timely accounting guidance would help the companies in capturing data and also planning how to communicate with their investors. The task force also noted that without such guidance, businesses are faced with the challenge of providing meaningful financial information to the public reflecting changes in triggered by the recent event. By the way, the term Emerging Issues Task Force (EITF) refers to the organisation that aims to provide assistance and improvement to the financial reporting system. The EITF was created by the Financial Accounting Standard Board in 1984. Next, I will pass to Wan Atira to continue the presentation.
Thank you, Ain. So let's move to the issue of financial accounting in September 11 terrorist attack in US. So this case is focused on three issues, which including how losses or other costs caused by the incident should be reported in financial statement. Second is when those losses or costs, which is asset impairment loss or liability for other losses and costs, should be recognized, whether on September 11 or some later date. And third is whether other information or disclosure about the economic effect of the incident should be provided in the financial statement. Because of this issue, it will lead to a conflict of interest between the manager performance and the investor, which manager performance think that would be best measured by earning excluding the cost of this event. Why? The investor are interested primarily in future cash flow. What they want not to what to more earning including this event. So next slide, I will pass Fatana to continue.
Okay, thank you, Wan. Now I will continue with fundamental issue of financial accounting theory. There are three fundamental issues of financial accounting theory that we found in this article, which are positive theory, agency theory, and institutional theory. Okay, let me start with a positive theory. In the positive theory, it seeks to explain and predict accounting practice. It is focusing on the relationship between various individuals, including agency relationship. This theory tends to make some predictions about real-world events and transform them into accounting transactions. In this case, the company tries to separate the cost of the event from the financial statement as separate reporting of earnings. This is because For the company, it is the best method to evaluate manager performance and the best method to investors that are concerned about reliability. The second fundamental issue of financial accounting theory is agency theory. Agency theory is attempt to explain about organizational behavior. The separations of ownership and management lead to the conflict whereby the interests of shareholder as a principal are not aligned with those who manage the company, which is the agent. In this case, the company as a agents want to separate the cost of the event, but the investor as a principal is interested to not including the cost of this event. The issue of the whether to include or separate the cost of the event in the financial statement lead to the conflict of interest between the company that and investors, since the interest of company is to show the earning of the company is always good. Besides that, the manager performance also will be the best measure by earning excluding the cost. Okay, lastly, for the institutional theory, this theory assumes the organization is influenced by external and internal pressure. In this case, external pressure is the regulation. Regulations imposed by the FASB result in the company being guided by limited element, which is FASB decide that all related costs to the event should be included in cost operation. This that approach is consistent with the broader objective of providing financial report that communicate effectively and clearly. I think that's all for me. I will pass to Humaira to continue the presentation.
Okay, thank you, Fatana. Now I will continue with the last part of this presentation, which is the solutions for the fundamental issues or problems that had been mentioned earlier. A task force of the Financial Accounting Standards Board, which is called the Emerging Issues Task Force (EITF), has decided that the September 11 terrorist attacks are not an extraordinary event, meaning the first point, companies are supposed to include the impact of the events as part of their continuing business operations. Those task force members suggested that although the September 11 events were unusual in for many businesses, those events did not meet the it did not meet the infrequency of occurrence criterion under extraordinary items. So this is due to the terrorist acts had actually occurred in the United States in the past, and it can reasonably be expected to reoccur in the future. Plus, the effects of these events were so wide-ranging and had such a pervasive impact on US businesses and the US economy. As a result, the foregoing communication objectives about extraordinary items could not be met. And this extraordinary item financial reporting treatment will not be an effective way to communicate the financial effects of those events and should not be used in this case. Other than that, it also be impossible to distinguish the effects of the September 11 events in any single line item on companies' financial statements because of the inability to separate losses that are directly attributable to the events. Uh, Moving on to the next point, the task force noted that many of the losses and costs that entities expect to incur as a result of this event will not qualify for immediate recognition as a liability. For example, the cost of restoring a facility to a condition suitable for occupancy should be recognised as the restoration efforts occur. Thus, the fact that an entity intends to incur costs after this event does not necessarily meaning that this cost should be immediately recognized as a liability. Last but not least, the company should at a minimum disclose the following information in the notes to the financial statements in all periods affected by this event. For instance, information about the description of the nature and amounts of losses and costs recognized as a result of these events. Secondly, a description about contingency resulting from the events that have not yet been recognized in the financial statements but are reasonably expected to impact the entity's financial statements in the near term. And these disclosures are very important to reflect the transparency of the financial statements because of the pervasive effects of these September 11 events. So I think that's all from our group. Thank you.